What's up, guys? Welcome to the second video. Today I really want to deep dive into risk management and the intricacies of that. And a lot of people have questions on this. A lot of people don't truly understand it. So I think it's good to have a detailed video on how I'm entering, how I'm risking. A lot of people say I oversize, or they think that I'm just gambling. It's not true. I have everything I do is correlated, right? Everything I do has a reason. So let's talk about it. First things first, you always need a stop loss. The only way you're going to be successful in this industry is having a stop loss. So our first example is going to be on Tesla. This is the leverage version of Tesla, and I just want to go over stop loss, and we can go over more and more all that stuff, and we'll talk about market sentiment, all of that later in the interview, or later in the video. And let's just go over risk management for the first probably like 10 minutes. Okay, so obviously, how would you enter Tesla? Why is this even a good setup? It's really not an ideal setup until you look at the weekly chart. Now on the weekly chart, you had an inside candle, okay? A nice little base, higher lows, a little bit of lower highs, but overall a very nice base. You have that inside level. You have a very clean level in my opinion on the daily. Very nice daily. So again, a clean level, and so that's what you're entering off of. Okay. Now you need an entry tactic. So I like to do the 1 minute or the 5 minute opening range highs. On this one, I did end up doing just a pivot level, which I was a little late to. But let's talk about this, okay? So, when entering a stock, you buy, I have a criteria. I need a stock to go through 1, a pivot level, and then 2, it needs to either take out a 1 minute or 5 minute high. So, let's just say, for instance, we're talking about Tesla 5 minute. So the stock has to go through a pivot level. That's a non-negotiable. Has to go through a pivot level. After it goes to the pivot level, it must also have taken out a 5 minute opening range high. What is that? Well, let's talk about it. So the 5 minute opening range high is just the very first 5 minute candle. The high of that candle is your entry point. But unless the pivot is higher than the 5 minute opening range high. If the pivot is higher, then I usually will just wait for the pivot. So, yes. Now let's talk about entering. So, the pivot on Tesla was right here. My white line is the pivot. The stop loss on this is 3%. Now, my entry was a little bit later, so let's just talk about my entry. Mine was 4%. Cool. So, that being said, how can I position size accordingly? No problem. So, it depends. Are you risking 1% or 0.5%? I'm typically risking 1%. You can do 0.5%. 0.5%. Here's the big difference between the two. 1% risk is you're gonna have a lot more gap down risk overnight. So if you're not worried about gap down risk, I'm really not that worried about it right now, then 1% is fine. If you are concerned about gap down risk, then just do 0.5%. That's completely fine. So now, let's bring this up. So we had a 4% stop loss. We need to make that clear. So 4%, which is the level between our entry point and the low of the day. I typically always use low of the day stops, so 4% is the stop loss. Now, ADR is also important. You never want your stop loss higher than the ADR. So if you look up here, the ADR is about 9. 4% is lower than half of 9. So that's completely fine. So checks out, it's under the ADR, took out 5 minute highs, took out a pivot, so we're going to enter. How much size do we take? Good question. So, for 1% risk, okay, if you had a 10% stop, a 10% stop loss, 1% risk, if you buy something and it falls 10% and you get stopped out, you lost 1%. For a 5% stop loss, you can put in 20% of your account. If it falls 5%, you lose 1% of your total account value. If you have a 4% stop, you can take 25% size, 1% stop out, right? You guys can read the rest. You guys get the general objective. So for this case, we got a 4% stop. So we can take 25% of our account, put that in this trade, and still only be risking 1% of our account. That's big, because sometimes you're going to get times where you get a 3% stop, and the stock goes up 60-70%. And so how you can measure R is just how much the stock has advanced. And so what you would do is let's say a stock has went up 40% and you got a 4% stop loss. That's 10R, because 40 divided by your stop loss. You would do the percent the stock has advanced divided by your stop loss, and that would give you your R. So 40 divided by 4 would be 10R. So you made 10 times your risk. That's big. That's huge. That's awesome. If you can make 10 times your risk, you can be consistently, you can be profitable with a 10% win rate, right? So that's big. Very important to know. Now, where this gets good is I'll show you some other trades that I've taken in the past. This one was especially a good one. Let's talk about AFRM. So, knowing what I know now, I actually could have entered this way earlier, but let's just say you entered on this gap up day. My stop loss on the 1 minute high was 3%, okay? 3%, so 3.10%, you can just call it that. Now, I always trail the 5 and the 10 EMA. Non-negotiable for me. I'm really bad at selling. These are the sell rules I've developed to really make my selling efficient and profitable in the long run. So at this time, the ADR on the stock is 7.20. So you got a 3% stop on a 7.20 ADR, right? Very good. That's awesome. So essentially, and I'm going to actually show you guys how I calculate all of the things, whatever. Okay. So if you look at this chart, it never closed below the 5 EMA until, I guess we could say right here. So you had, on a 3% stop loss, you had a 41% move. So now we can go to the calculator. Don't mind what I'm watching. Shout out Aiden Ross. Shout out Drake. You guys see this? Big fan. Okay. Now, you would do what? You do 41 divided by 3, right? So, for your first half, you got 13R. That's awesome. Amazing. Couldn't ask for a better trade. So, that's how R works. That's how position sizing works. Again, a quick summary, a quick overview is stop loss. You do so to get to your actual size here. Let me show you guys this. So to really actually understand how much size you're going to take, you're going to do your. Hold on, let me make this smaller for you guys. Okay, so here's how I'd enter this. So my entry would be right here, which is, my entry would be 28.2. So that's 3% from the low of the day, okay? 3.10%. So how I would calculate this is whatever account value you have, you do account value divided by stop loss, gives you how much money you can put in the trade. So for this one, let's just say I have a 25K account. You do 25,000 divided by 3.10. So I can put in $8,064, and I'm only risking $250. That's a big deal. That's a huge deal. You know, you make 10% on 8,000, that's 800. A 10% move is 3R, right? So that's a big deal. And think about how good this can get when you get a 2% stop loss. You can put in half your account and only be risking 1%. Big. So that's how I enter. That's how I enter. That's how I'm calculating my risk. All of that good stuff. If that made sense, let me know in the comments. I can further explain it if I need to. But essentially, you can really just go off of this, okay? Find your stop loss. Do it with the appropriate size. If you want to do 0.5% risk, I have that on the right side. Follow that, and if you can do that, you can be successful. Like a lot of people just struggle with risk management. If you can just have good risk management, you're going to be fine. Okay, cool. Now let's talk about where we're at in the market, how are we looking, all that good stuff. So today, or Friday, we had the QQQ, we opened up, we came down, filled this gap. I actually shorted this. We filled that gap, that's where I covered my short, and then we ended up closing really strong, right back up with a thin candle. So if we can take out that high, this high right here, super bullish. You know, basically a wick off the 5 EMA. I love that. Maybe we go sideways a bit more, pull into this 10. Just, you know, efficient. Now the good thing is we took out this high, so we're not making lower highs anymore. I am bullish in this market. You know, I love this action. There's a bunch of setups. Here's my focus list right now. Bunch of setups. Great action. Phenomenal. Okay. RSP. Wicked out the 5 EMA. This is the equal weighted S&P. Very bullish action to me. Very good. Bitcoin. Also, just kind of grinding up now. Nice move. This thing needs to get over this 200. You know, really need to get back up to 70K. Then we can be talking about, you know, Bitcoin to 100,000. Right? In terms of breadth, we go to the MMFI. You know, we're definitely a bit oversold. Now, here's my caveat to this. You know, you always want to be paying attention to when the market is oversold or like extremely oversold, because that's going to give you your long signals. It's a different story though whenever the breadth is oversold, because I'll tell you why. Right? In this November rally, look, you're oversold for a pretty good amount of time. You're oversold from, you know, late November all the way to January, right? This is still oversold. Then you start going to neutral, you know, but all of this was still a strong market. If you were trying to short in this oversold area, you probably were getting killed because, you know, the market was really strong. So the caveat to oversold breadth is that the market is going to stay oversold in good markets, right? In broad rallies, in broad markets, it's just going to stay oversold. There's nothing you're going to do about it, right? So it's not like if it drops to 20, okay, I'm really looking for some longs now. I'm looking to get long. I'm looking to bottom catch this move. You know, selling the strength. We make another leg lower. You know, bam, long here again. Oh, we're getting a broad-based rally. Let me hold my positions, all that good stuff. Now that we're in this oversold area, you can't necessarily trim just because we're oversold. Because again, the market's going to stay oversold in a good conditions. And what you're seeing is the equal weight is at all-time highs. So we're in a broad-based rally, right? We really are. The QQQE is off a big, big base. It's basically been flat since February. Or early March. You know, back here was January, February, but now it's like early March. Cool. So basically, what we're having right now is we've got a big base, you know, since March. That's, how many months is that? So we've got pretty much 1, 2, 3, 4, 5, 6, 7. So since for 8 months, we haven't made any progress, which is awesome. Because now you get a rally off of this base and really in the all-time highs. Because really, this level hasn't breached higher except for this fake move since 2021. So you're really talking about a strong tech rally off of this huge cup and handle, and then obviously huge short-term, base since February. Long-term base since 2021, which is awesome. The bigger the base, the bigger the move, right? QQQ has essentially not moved really since back here it was March. Now we're talking more June, July. But again, we've had 2 waves down. We could maybe see a third wave, but with stocks acting the way they are, I don't think we're going to get that third wave. I think we're going to go and push for all-time highs. That's pretty much, I think that's all I have. We can go over the IWM, acting strong, above the 5 EMA. One thing you guys don't want to do is if the stock is above the 5 EMA and the market's, under the 10 or, under 20, that's a strong stock. Do not doubt stocks that are above the 5 EMA because they're strong stocks, right? That's just the way it is. So let them work. Let them be strong. Current positions, we did do some trimming. We trimmed half of Wolf. We haven't trimmed any RKLB. We did trim half of Redfin this day. Cores, we still have our full position. Entered down here. TSLL, we still have our full position. Maybe you could add. I don't know. We'll see. I'll think about it. Lumen, I sold this in the morning and then I bought it back later in the day. So I have my normal position. And yeah, that's really all I got for you guys. I appreciate you guys watching. Here's my focus list for the week of September. It'd be like 23rd. So September 23rd. Here's my focus list. I really like NVIDIA. I like NEO. I like Tesla. Upstart looks really good to me. BLND, another really good name. Peloton, I think maybe needs a bit more time, but looks promising. An inside day would be really cool. That's all I got for you guys. I appreciate you guys watching. I love you. Thank you. And have a good one.